Hello and welcome to today's Where's the Trade. My name is Joshua Bellinger of OptionSizzle.com, and this is our nightly video tracking option activity in the options market and showing you how to trade it. So taking a look at Humana, it is a healthcare company, and there has been a significant amount of put activity that not only traded today but also yesterday as well. So what we want to take a look at is the option montage, and in overall, let's just look at the statistics. You can see that 43,000 calls traded, and 35% of them traded below the bid, with 50% of them trading above the offer. So there's a big skew here, and the call side, a lot of them traded mid-market. So the trade that caught my interest actually occurred in the August contracts here, and the trader, this is a three-way spread. They sold the 75 call here, and they purchased the 67.5 strike on the put side and sold the 60 strike. So if we take a look here at where current prices are at, they are showing that by August expiration, prices are not going to be above 75 bucks. So they're using the premium here and using it to offset the purchase of this put spread. So this is anticipation potentially on a decline lower, going from 67.5 all the way to 60 here, which we'll look at the chart in a second. There was some May 67.5 put buyers as well. And if we take a look here in April, there's some short-term or shorter-term activity as well, but you can see where the open interest is at here with the 67.5s here and 65. So let's take a look here at the daily chart, and if we just looked at the left of this chart, it's very rangy, and rangy being it's range bound. So if we take a look here, you see the recent high, or a relative high, was 82.50. I mean, we moved outside that, but a low here is where we look at this 60 level, and that would be a 52-week low. So what's going on is that with the budget cuts with Medicare, they could be they could get hit by this. And just a little bit of the headlines that I saw, I mean, we're talking about government cuts up to $11 billion, I believe. So that has a strong reflection on the prices here, where we could see where we came into February and then we very strongly declined, and that would be a very aggressive move lower from 82.50 to 62 or $60. You can see that it's kind of came back up here. It moved a little bit lower today, and the way that I think would be the best way to find an opportunity in this one is to structure some kind of trade, especially when we're looking out to August. I think structuring a trade with like a broken wing butterfly, maybe looking at 62.5 and a 65, 62.5 and a 60 strike, that butterfly may be a good opportunity to play some downside weakness with about 148 days to expiration.